Day trading is a game of probabilities. You know, when you first get started in trading and you're receiving that bad common trading knowledge, you know, they're going to tell you that it's a 50-50 game. They're going to tell you that, hey, you got, every time you take a trade, you got a 50% chance to win. You got a 50% chance to lose. Let me tell you something. If you flip a coin every time to take a trade, because you know, if you flip a coin enough, it's going to come out 50-50, right? But if you flip a coin every time you want to take a trade and just go with whatever the coin says, you are going to be a losing trader. Okay, trading is not 50-50. All right, and so in this video, I'm going to show you how you have to put the probabilities in your favor in order to consistently be profitable. Let's go deeper. All right, so I'm on the chart. We're going to jump right in because, again, trading is a game of probabilities. All right, so we're going to jump right on the chart. Hey, look, I already got my tool up, right? So let's start with a range. Let's start with a range. All right, so let's say we have a range, right? Prices is doing this inside the range, okay? Rule number one, when talking about range trading, you do not enter in the center of a range. You want to know why? Because anything can happen. There's a 50% chance that we can go higher, right? There's a 50% chance that we could go lower, right? When we're in the center of the range. So now, when you definitely have a range, that's the one time that the market is 50-50, all right? But here's the thing. Here's the key. Here's the key. Don't take 50-50 trades. That's the whole key to trading. In a nutshell, when you're talking probabilities, don't take 50-50 trades. If you are analyzing the chart and you clearly see that, hey, this trade has a 50% chance of winning, 50% chance of losing, that's the trade you want to skip. Okay, now let's go back a little bit on this range, but that's the trade you want to skip. Don't take 50-50 shots. So the rule is that you don't go. Now, same range, right? Same range, prices touched. Hold on, let me do it better. We hit the top, hit the bottom, hit the top, hit the bottom, hit the top. Now, we've had two touches at the top, right? Let's say when it hits the top this third time, you get a huge strong bearish candle coming down, right? So at this point, there's a 70% chance, I would say. Now I'm guessing at this number, but I would say there's a 70% chance if you got a huge bar here, there's probably 70% chance that we're coming lower. There's probably only a 20% chance, excuse me, gotta do my math right. There's probably only a 30% chance that prices are gonna break out the top because we came straight to this area, rejection, straight to this area, rejection. A third touch, and you get a huge candle off again, there's probably a 70% chance we're coming back down here. Now, this is a trade you take. Why? Because the probability is in your favor, 70-30. See the difference? And going in the center when it's 50-50, don't take 50-50 shots. Wait until the probability is in your favor. And this is a key example. At boom, there's probably a 70% chance that prices is gonna come back down here, or at least drop far enough for you to get a couple points and get a win. Okay. Now, same scenario, but let's look at it a different way. Oops, and this is how I like to do ranges. So we got a range, right? We've had a touch, down, a touch, down, a touch. So remember, this was the one we just would have won on going down, right? And then on this fourth touch, you get a breakout, right? But we don't take the breakout. You don't take the breakout. But then prices pull back again, test this area. This is what we call a breakout pullback entry. Then guess what? Prices go and get higher than this level right here, break. So guess what? At this point, your odds are something probably like, or the probability, I would say, is probably about 80% that prices are going to keep going up, and it's probably about 20% that we're coming back into this range. You know why? Because we've tested it 3 times. We broke out on the 4th test, came back, tried to go lower, couldn't. So now this level that used to be resistance is going to start acting as support. We broke out, we pulled back, then we broke higher here. This is the beginning of an uptrend, more than likely. The probabilities say we're probably going to be in an uptrend now. So that's 80% if you go long right here, compared to 20%. So if you're just flipping a coin at this time and the coin says to go short, you're about to lose money. Okay. Take trades where the probability is in your favor. So you see the difference. I feel like this is 80-20. I feel like here was 70-30. So what you want to know what I do when I see a range? Wait for the breakout pullback, right? And I'm going to take the trade that has the higher probability. All right. So trading is not 50-50. Okay. Depending on what the market is doing, where we are in the market cycle. Okay. It could easily be 70-30, 80-20. This is how people win consistently. If the market was really 50-50 all the time, nobody would win consistently, unless they had, some outstanding risk management, which you need to have anyway. All right. So let's look here. Let me try to make this thing smaller if I can. Okay. So we're going to look at the same thing when we're talking about a trend. All right. So now, as you see, we're clearly trending down. Okay. We're clearly trending down. But guess what? I'm just going to start at this point right here. The rule is the best entries are on, off, or around the 21 EMA. The 21 EMA is considered our average price. So your best entries are on, off, or around the 21 EMA. So when prices is right here and you see this, a lot of people are thinking, yeah, let's go short right here. No, don't do that. You know why you don't do that? Because the probability is probably 50. It's probably a 50% chance that thing can keep going lower from right here. And it's probably a 50% chance that it can pull back to the EMA. All right. And I'm being gracious with that. It's probably more like this. It's probably a 60% chance that it's going to pull back and a 40% chance that it keeps dropping. That's probably more accurate. When prices are right here, we've already trended well off the 21 EMA. Yeah, that's probably a 60-40. So don't go right here because you only have a 40% chance of winning. You see what I'm saying? As you get to learn, as you watch markets trend and watch markets move, don't go down here. You've already missed the drop. You've already missed the run. So there's a higher probability that we're going to pull back to the 21 EMA. Okay. So you don't go right here. You don't go short right here, even though it's a clear downtrend. You're too far away from 21 EMA. So you probably only got a 40% chance of winning that. And guess what? So one day you're going to take it, you're going to win it, and you're going to think it's a trade to take. And you're going to kind of be addicted to it. And you're thinking, I'm going with trend, so I'm doing the right thing. No. That if you enter right here, it probably only has a 40% chance of being successful. So you have to wait to put the odds in your favor. So how can we do that? Well, we do that by waiting for or spotting the second entry short. So check it out. Instead of going here, we wait. We get a push up, first entry, all right? Push up, second entry short. But let me explain to you what's happening here. The market has made 2 attempts to go higher and it failed, okay? Now, not only that, we use this 21 EMA and we say the best entries are on, off, or around the 21 EMA, right? So when you didn't go right here and you said, hey, I'm going to wait for it to pull back, and it does pull back and pauses right where you thought, that right there tells you, okay, that, all right, the odds may be in my favor here. The probabilities may be in my favor. And I would say this trade if you go short right here off the 21 EMA after it's made 2 attempts higher and stalled right here, I would say your odds are probably 80%. Hold on, I would say it's probably 80%. Their prices are going to drop and try to retest this low. That's probably an 80% shot. And it's a probably 20% chance that it goes higher because it's already tried twice. It's already tried to go higher twice, right? So this second entry short, that's why has an 80% success rate in this market condition. I'm only talking about this market condition right here. I would say it's 80% because you had 2 attempts higher. You're in a downtrend overall. And then you get a perfect push up, first entry push up, second entry short with a gorgeous signal candle right here. This is an 80% shot. 80% shot. Now, is it going to work 100% of the time? No, because it's an 80% shot. But I'll tell you what, going here is way better than going here. And the crazy part about it is you're only a couple, that's only maybe like a point difference, but you've read the price action. Price action said the rules is to go around the EMA if you trade price action the way I do. So this is where you go. Okay. So I mean, that's the lesson right there. Probabilities. Because the same thing is happening going long. The same thing is happening. You go long. Hey, the probability is the probability is you always want to go with trend. Okay. So what are some things to put the probabilities in your favor? Like I say, follow your rules. But hey, if you're trading with trend, that 50-50 is probably at least 60-40 now, just doing that, right? Then let's say you get a setup, push up, first entry, push up, second entry short. So now you got a setup, you're with trend. So now let's say that probability probably just went from 60-40, to now we probably got 70, 30. Then you get a good signal candle, bam, right there. All right, so now the probability just probably went from 70-30 to 80-20. So do you see how the market is not 50-50? You have to find you have to put the probabilities in your favor. And when you do that, man, I mean, it changes everything. You know what I'm saying? It can completely change how you trade. So since we had a nice downtrend here, let me show you some more. All right, so we trending down. We get this trend down. Look, it tried to make 2 legs up. It did. Actually made 3 legs up. Then, boom, start dropping hard again. Okay. So now we're dropping. There's trades through here. I just want to show you something. So we're dropping. And then look, it tried to go higher. Here's a low. Push up. First entry, push up right here. Second entry short. All right. Now, if you don't like that one, then you wait again for prices to get back under the EMA. Here you go. I had to point it out. Couldn't go without it. Wifey trade. Hold on a second. Make this a little bit bigger. So you can see it. There you go. So now, again, we've made 2 attempts higher. Push up, first entry, push up, second entry short. And the second entry short was working. Your stop would be up here. Then it pushed up. Try to go higher again. That's 3 attempts. It's really 4 attempts. 1, 2, 3, 4 attempts to go higher. Now we're back under the 21 EMA. Now we know we've been in a downtrend. We already know that the dominant trend is down. This we already know. Okay, so let's do it again. We're starting 50-50. We're starting 50-50. All right, but now we know we have a dominant downtrend. All right, that's gonna change the probability for us right there. If we go short, we know that it's probably 60-40 just because the dominant trend is down, right? But then we get a wifey trade, so we have a setup. All right, so now our probability is probably 70-30. All right, we got a setup. Then we get a beautiful signal candle with our setup. Hey, again, we're back up to probably 80-20. All because all that came to, not to mention we bounced off the 21 EMA. All that came together to say, if I go short right here, my probability of winning this trade could very well be 80%. All right. So that's the lesson I'm trying to get to you today. Don't take 50-50 shots. All right. Take shots that you can put price action in your favor to put the probability in your favor. And if you catch this one, I mean, by golly, Miss Molly, all right? That's a I mean, you catch that one, we're probably talking 30 points, okay? I think this was a 30-point drop, all right? So this is not no 50-50 shot right here. With everything that's lining up, we know we're in a downtrend. We got a setup. We got a signal candle. It's off the 21 EMA, our best friend, okay, which is the average price. Hey, this is a 80% shot. And if you can get good at only taking 80% shots, then you will be good at day trading. So hey guys, if you guys enjoyed this video, hit that like button for your boy, all right? And if you need to learn price action trading, I will put a link in the description for you. Now, I just recently did a video where I was showing why I use the 2000 tick chart, because it helps me see the market, it helps me see the volume, it helps me feel the momentum in the market. So if you want to learn about that, check this video out right here. It'll put you up on game. And until next time, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.